Hello, everyone. TGIF, and yes, it is the beginning of Trader Summit today. Mary, how are you? Richard, Sinatra, how you doing? Ryan, Paul Penman, good morning to you.
Morning, Dale. You all good?
Everything's shaping up for, a big weekend.
Yeah, very big weekend.
Huh?
Real big weekend.
Yeah, so let's see what we could do in the meantime to kind of talk a little bit about what's going on here. See my Dixie, Ryan?
Yeah, up towards that 100, isn't it? Made the break.
Yeah, I've noticed, the last couple little reversals. I wanted to ask you, and we had it tried at 78.6, and it's trying to hold 88.6. It seems like there's some buying in Europe that is, on all the dips. They're happening, in Europe and ending in the U.S. Can you make anything out of that?
You mean buying dips in euro dollar or buying dips in the dollar?
In euro, I've noticed that, all the lows are happening in Europe, and then by the time I'm up before the U.S., we've already, recovered from those lows. So seems like buying's coming in that session. Does it mean anything?
It could just be as we like to point out, some of the models coming on, but they get bought, but they're getting sold just as quickly.
Okay, yeah.
We're edging lower and lower and lower and lower. So it's, we've been saying it for a few days now. The pressure's on. I don't see any reason to buy the euro right now.
Right.
We're moving down through the levels that we've had on the charts for a while. 1870, 80 is one. We just had a little nudge to 90, but we're back below again. 108.30 is another one. So if those go, we're going to have a test of 108.
Okay, so does it mean anything to you that we've tested 88.6 in euro, and euro pound has retraced 61.8 from this little ABC move here? Does it mean anything?
Yeah, well, we've held
up better.
Yeah, we pretty much held the 83 handle, which has been more longer term support, and that's pretty much my main level as it was the last time we came down here. It's sort of a bit of a line in the sand before we get a move down towards the 82s, low 82s. Again, the pound just looks crap today. It looked like it was pulling out beginning of the week, looking higher, and then it's all the way down again. And now perhaps we're going to test this 130 level, which was very strong the last time we were down here. And conversely, that's what euro sterling. It's still a bit in the mix. It's not really leading. It's doing more following,
holding up a little better.
Yeah, it is holding up a little better. We've got that bounce from close to the 83 handle, but if we break there, then it's potential downside all the way again. And again, I fear for the euro. I don't think it's strong at all. It's very weak, and I just can't see it rallying until we get some decent news. And we've got these risk events going into the weekend. Obviously, the Ukraine situation keeps bubbling, but we've got the French elections coming in, so that's a weekend risk for Sunday night. When the exit polls start rolling off and the press start pumping the news Sunday night, early Monday morning. So that's something traders need to be aware of. Potential gap risk if it's bad news for Macron.
Okay.
See where we are on Monday.
And yen has now retraced 78.6 of the break from down here.
Yeah, back on the right. Yeah.
New highs or failing rally? What do you think?
I think that 125 is going to be a big test. I expect to see, that second candle we've got after that 125 touch. That indicates, the potential level. We're at one here. With those, go move along 3-4 candles. You've got those double candles there around about this 60 area. And that's what we're going to, 26 area. That's what we're looking at. You pick what I like is after we've had a big move like the spike up to 125 is what are the next candles after that. And I said this at the time. I want to see where the multiple day ranges come in, because they give you an indication if you're going to go to those highs. Well, you've got to get above 26. If you're going to go to 125, you've got to get above that 64 area, 65 area. And if those hold, then it gives you a sense that that's potentially marking a firm top, because that's where the sellers are parked up. Those who sold at 125, they step down to these sorts of levels, and if they protect those levels, then we potentially have a range developing between 121, 125, and gives us a range to trade in, barring as usual any big news coming out from the BOJ or Fed or anywhere else.
Aussie dip to buy here, or should you be patient and wait? Maybe there's more left, like to the trend break or something like that.
I think it's, as someone who's long, it's very concerning. We made the break up through so many levels, decent break trades, and we've just undone it all. It's come all the way through. This is a bit of another line in the sand for the Aussie. This 74, 60, 50 area, because it was the low of the consolidation phase that we had. When we were sitting here and we were trading 74.80, 75.20. Up to 75.40, down to 74.60. It was that consolidation phase. If we get under there, we could be heading much lower and down towards 74, as you've got a line there. That 74.40 area. Yeah, that's another support point. Get under there, and it's going to start to look very bearish for the Aussie.
So Canada woke up from 124.
Cool, did it some?
A little bit.
We got to move that one.
The loony one. Huh?
Yeah, it's about. I don't know if it's following oil, following yields, following the dollar. It's still a bit confusing. We've got the jobs report out at the bottom of the hour. It could be down at 124.5 or more if it's a decent number. We got obviously the Bank of Canada next week, so that's what we're going to be potentially trading. So you see dollar CAD up at near 126, and the market's expecting perhaps a 50 pip hike next week, and you think does that compute?
Yeah.
Ryan.
What do you?
Hey, good morning, guys. Hey, Dale, how you doing this morning?
Good, buddy. How are you?
Hey, it's a big day today for the event. So but I wanted to chime in about the Canadian jobs report. So I noticed, Ryan, that you're not running a giveaway for the Canadian jobs report. Like, that's racist, man.
Oh, what? What am I doing? What have I done wrong?
You're not doing a Canadian jobs report giveaway for ForexAnalytix. So, are you anti-Canadian? Is that what you're saying?
No, it's just that their data's rubbish all the time.
I'm just harassing you. No, I was going to say that the dollar Canadian is at it's at a really interesting area, because we're nudging right up against the 200-day moving average. We're getting close to anyway. And this is one of those things that if the Canadian economy shows any type of weakness, and usually I'm not, or at least at this time, I'm not really focused here, Dale. I'll take the charts really quick.
Go ahead, buddy. Okay.
I'm not so focused on jobs data, but the fact that we had this false breakdown in the Canadian here, like you can see that little, the false break. We actually had two false breakdowns. We had one last week, we had one this week, and that kind of did it in, for the short. So now here we are pushing right up against the 200-day moving average. So, the question is, if we get above that 200-day moving average and you're short, how are you going to feel about that? And on top of it, if you look longer term, it's a break below this wedge. And then if you have a false breakdown longer term, let's just say we close, let's say the number is really horrible. I mean, what's the market looking for today, Stelios? Do you know right off the top of your head?
For the
I'm sorry?
80K, yeah.
80,000, right? That's on your data flash right there. So let's say they lose jobs, and people aren't really focused so much on the jobs data, but let's just say that number is a kind of a jarring number for people. Remember, you take Canadian data and just multiply it by 8, 10, that's where you get to what it would be equivalent of a US number. Let's say that, by all intents and purposes, it's like they lost jobs, and, people start raising some eyebrows. And I'm not saying that's going to happen. I'm just saying if it does, because so many people are not paying attention to the data that everybody's attention will automatically go to the Canadian dollar, paying attention to the data if it does miss. And then next thing you know, you got the dollar Canadian trading closer to 127. You got a false breakdown. Now, if I was short, and I'm not, and by the way, I don't have any Canadian exposure at the moment. So I'm talking just purely from an unbiased opinion, taking a look at it at this moment. I would not want to be short if we were above the 200-day moving average and closer to 127. You guys have any thoughts here?
Good morning, everybody.
Hey, good morning, Kman.
It's a big level. 126.15.25. It's a big level on the dollar Canada. The close will be important today. There's the channel break. There's the 200 DMA. There's a couple of other things going on. There's a F.A.C.E I have as well. So there's a lot going on. 126.15.25 for the dollar Canada.
And what's interesting also about that is you got people like Andre's in our chat room, and I don't want to. Andre, just so you guys know, Andre does the wrong tab here. Andre does the harmonic patterns, the beautiful harmonic patterns that we see inside the ForexAnalytix platform. He is actually looking for the dollar Canadian to stall up here at these levels. That doesn't mean it's going to. He's just pointing out that there's a harmonic pattern that has developed. I'm not going to, take that away from him and take you into the chat rooms and show you that. But I'm just,
Is it like a bearish unicorn pattern?
It's the bearish monkey pattern. That's a total inside joke. If you guys have listened to Paul Franco for, 10 years or so, he was like, he says in his Texas twang, Paulie's been with our team for almost since the beginning. Paulie's always like, yeah, and I don't look at them monkey patterns.
Yeah.
Like that. I was laughing. I literally laugh my ass off every time. Anyway, and because you can just hear his San Antonio, Texas twang saying it too. Anyway, jokes aside, yeah, it is. He said there is a setup that he sees as a big reversal area up here, but technical levels, once they get mulled over and just rolled over, then next thing you know, you can get a pretty big reversal, especially on big data days like today. So that's something that I'm actually looking at, and I'm not, like I said, I don't have any exposure, but I do think if for some reason we do reject up here and we start heading lower and the dollar Canadian heads down towards 125, then that's going to prove to us how big this whole area is, as Kman pointed out, and I'm pointing out over here. Also, let's take a look at the dollar index. Here we are, channel resistance, stretching its legs. So believe it or don't believe it. What do you guys think?
Well, technically it's a clear break, isn't it?
It is. Do you believe it or do you not believe it?
Well, zoom into it if you can, just a bit further. And the reason I believe it is because what's happening straight after the break is we're finding a level support. As I say, technically it doesn't get much more perfect than that.
Right, it's holding the breakout point, right?
Exactly. There's your confirmation. So if you worried about the first break, well, we hovered around, then the candles after held. There's your cue. If you can't go with a break, go with the confirmation.
And I'm going to venture to guess, and this is just and this is somebody that is long euros. I'm talking to you from a biased euro bullish long position that I currently have. I'm going to venture to guess that the euro is not going to be breaking out today. It's not going to break higher. There's going to be there's too much nervousness about what you pointed out. The weekend, especially all the, I know that they've closed polls, but, you know, the Le Pen, you know, risk to Macron, you know, that's going to prohibit, you know, people stepping in too aggressively on the euro, unless there's some headline, you know, that you know, hits today. I can't see the dollar. In other words, I can't see the dollar index breaking down today, or the euro breaking higher, unless it's a headline event. So therefore, the dollar index is probably going to have a weekly close above the 99.40 level, which is going to be, for all intents and purposes, a bullish, you know, a bullish candle, right? So
Yeah.
that's something that, you know, we have to keep in mind. So anyway, that's something I'm keeping in mind, even though I'm still, you know, long some dollars here, or long some euros here. So, you know, let me ask Kman. So what do you think about this dollar yen, Kman? It's holding up really, really well, and it's not giving it up.
Again, a couple of small headlines, but nothing against the yen per se. But then we had a better than expected current account actually out in Japan overnight, and then we saw this setback from above 124 back down to 123.65, and that was it. And here we are again, back above 124. And looking at the yields differentials, apart from an accident somewhere else, or MOF or Bank of Japan saying, okay, this is enough. Who are we to go and stand in front of the train, right?
Yeah,
and it's just bid. It just comes back bid. Okay, the crosses may be a little bit different because today we have a bit of sterling weakness, because now Chancellor Sunak's position might be looking a little bit ish because of his missus' financial situation. I think that's behind the sterling selling today. Even if there's nothing, the market doesn't like uncertainty, as we know, especially not for a finance minister. But yeah, the yen, it's forces to admit that dollar yen is just bid. It's just bid. And yeah, as I said, there's not many things apart from Bank of Japan and MOF saying it's enough that is really going to stop it.
Mike asked, what if the dollar yen closes the week below 124? Does that mean anything to you?
No.
I mean,
if it closes below 120, what is it?
121.30, I would
now,
actually worry.
okay, but I don't see a three big figure decline
No.
on Friday afternoon unless an accident.
Yeah, so
no.
I guess I'm looking at the weekly candle. Okay, so let's say it dropped, let's just say 40 pips, and it closed at 123.80. Would you care?
No, doesn't say
right?
anything. I would say, like, as long as there's not you remember the 123 back on the way up, 123 figure 10. If it goes above there, if it goes below there, then we may need to think about it.
Yeah. All right. Well, fair enough. And you know, Paul asked or said, "Hey Blake, you know, show the weekly candle on the dollar index. It looks, you know, frightening." I mean, it does. You know, there's obviously one of the things that I would be looking at here, just with the dollar index. You know, and I'm not one to focus on the weekly candles all the time, but you know, just looking at it right now, that is, I mean, that's a lot of damage between, you know, 100 and 102.25. I mean, that would theoretically put the euro probably close to 107, maybe a little bit lower. And then you're thinking, you know, those are longer term breakdowns in the euro. If that's the case, it would be hard for me to see the dollar index get to 102.25 without the euro. So in other words, yeah, I mean, if the sterling dropped to 127 and the dollar yen went to 127 as well, you know, both kind of in different ways, and maybe the Aussie dollar dropped down to 73 cents. Maybe if the euro could hold above 108, possibly, but I don't know. There's so much weighting in the dollar index with the euro that that would drag the euro way higher or way lower, excuse me. So
that's the important thing to note, you know, because this doesn't look like a dollar story. It looks like a weak euro story. So it's always important to know which side of the currency, when you're looking at the currency pairs, which side's doing all the hard work.
Right. And you know, but you have to point out also that, and you know, what the sterling can make a difference. You watch all you had to do is watch the dollar index around Brexit, and you would see how much of a difference the sterling can actually make, even with a 17% weighting, or what it's. I know it's somewhere in that neighborhood. You know, my numbers might be off just slightly, but it's somewhere around there. Anyway, so I think that's something that we.
I want to say a couple of things, please, whenever you are done.
I'm all Stelios full today.
Okay. So on the DXY, on the DXY, okay, we all know 50% of it is euro. So two things. One, for the euro, you've correctly said that there are all these risks at the moment. The Ukraine situation is influencing or affecting the Eurozone more than, say, the US. We have the potential of French elections. You know, Marine Le Pen is rising in the polls, but we saw last time she was that, and then on the second round, she got defeated quite easily because everybody else gets together, right? What was the third? The third was ECB, which is continuing to be dovish. Now, I think, you know, I personally think all these three things will reverse. So Le Pen will not win the elections, the ECB will turn hawkish, and the Ukraine situation eventually is going to get resolved one way or another. So I think there is risk for the euro to rally, but I wouldn't touch it yet. As I said before, I'll wait for the ECB next week. If they are hawkish, I'll buy wherever it is. I don't care where the euro is trading against the pound and against the dollar. The other thing I want to bring to everybody's attention is something that not many people have been talking about, and it scares the bejesus out of me. Yesterday, we had US consumer credit release. Now, that's the change in total value of outstanding credit that requires installment payments. Okay, so yesterday we had the second biggest change ever, positive, obviously. There was a reading sometime in 2006, I think, which was larger. I don't know if this was an outlier or not, or some kind of wrong print, but anyway.
And more than 3 times what was expected, Stelios,
yes,
right?
And also, if you go back in history, the 4 largest prints, you know, apart from that 2006, which looks like a misprint, I don't know what that was, they were in the last 8 months. Now, the question is, theoretically, a change in consumer credit means people are borrowing, so it's positive for the economy, for the dollar, blah blah blah. This is the case when the economy is starting to boom after a crisis or something like that. What's happening, I think, now is the average person cannot afford. You know, the disposable income is a lot lower than it is now with inflation in food, energy, everything.
Exactly.
They're living off their cards.
People are having to borrow. This scares the crap out of me. So
that's exactly the case, and this also you know, goes well with what I've explained before, Stelio, that under inflationary and under an inflationary environment like the one we have, you need to be very careful with how you interpret retail sales, because retail sales are not adjusted for inflation.
Yes.
So retail sales might be moving upwards, and people that don't know how to interpret that think, oh yeah, you know, you see, you know, everything is fine, the consumer is strong and all that BS. But the consumer is exactly what you described. The consumer, during the past at least 1 year, what do they have to do? They have to do the following. They have to spend more than they did to get the same or even less than they used to get, and they have to go deeper and deeper into credit to do that. So if that is considered to be a healthy consumer, then I'm probably, you know, an alien or something.
Can I just say a little bit of a counter? Maybe Blake and Dale can emphasize this maybe a bit more. The US use credit cards, like your average US citizen uses credit cards more for everyday stuff than we do over here. Like we use debit cards and things like that. So it's a natural thing to use credit cards. But like Steve says, when you get those bigger installment moves, where, you know, this is like sort of big items they're using that they're paying off gradually, rather than using a credit card for the month and then the wages come in and pay it off, so on and so forth. It is, and it can be reflective of higher wages as well, because obviously people are getting paid more.
Yeah, but Ryan, I don't know if you saw the print. The print was literally, I think the expectation was like for something above 10 billion, and the number came at 40 billion, so something like that. Number.
I'm not dismissing your view at all, Steve. I'm just putting in a little counter that credit card use over in the US is a bit different to how it's done over here.
Plus, Ryan, don't forget that when we're looking at the US numbers, we are comparing ceteris paribus, right? I mean, we're comparing the US numbers versus prior US numbers. So it's not that the US consumer behavior has changed or has been altered somehow, having to do with how they use credit cards during the past few months, right?
Yeah, but
It's a big number.
At least interest rates on credit cards are low, right? So that's fine.
Oh, exactly.
Let me just say something. This is one of the things that scared the hell out of me. It does scare the hell out of me because right around the financial crisis, I was having my 20-year the GFC housing collapse, blah blah blah. Yeah. I was having my 20-year high school reunion, and I flew in from Dallas to come back to Phoenix, Arizona, which was one of the hardest hit places in the United States, right? And that's because this is my hometown, and I hadn't moved back yet. I was still living in Texas at the time, and I flew into town. I guess it was 2010, and home prices have already been decimated completely. People are literally broke. I would say broke, but you know what I mean? I mean, they were tapped out, and the stock market had completely collapsed. And I was in Phoenix, and we met up at with a bunch of us. We met up at a restaurant before this 20-year high school reunion, and I was sitting in the mall, and I'm looking at the Apple store, and it was packed. I mean, packed. And people were, and actually the whole mall was packed, and people were just spending money and I'm like, there's foreclosures left and right and everywhere. And the reason why people had money, because they basically would, they would not pay their mortgage. They would shift their money to just, consumers are crazy here in the US, right? So they would just continue to spend money. And they would, without a care in the world, because they weren't paying their mortgage. Well, this is a different story, right? So they'd use their credit cards. They just pay out the credit cards with the money they were going to use to pay their mortgage, and then they get, moratoriums on their mortgages, and some would foreclose or whatever, and and obviously life went on. That was then. Today's a little bit different because people, where are they shifting from? You know what I mean? They're not. The point is that inflation is high. They are tapping out their bank accounts because they got their savings got maybe flush with government money from COVID, but that's gone. I think gone, depleted now, and now where is this money going to come from to pay down that debt? And I think you guys are all spot on that the US consumer now is really just using their credit cards to keep up with the Joneses, if you will, just to maintain life.
Is that going to kick people into going for more jobs? Because one of the big problems they're looking at over where you guys are is that a lot of people through COVID didn't want to work anymore. They came out of the market. Is this going to drive them into work because now they think I've got to find a buck to live on?
Maybe, yeah. Oh shoot! I was just looking at the yen here, but we should actually go look at, and the yen is popping through resistance. You don't have an interview today, do you, Dale?
No.
Okay, all right, cool. So we're going to do the Canadian jobs.
He actually does have, but it's within the Trader Summit.
Right. Dale's like, yes, great, fantastic. Sterling's breaking down. And by the way, the sterling's coming up towards that 130 level. Anyway, like I said, it is a little scary when those numbers jump like that, and I try to think, why, and really the only reason I can come up with at this stage is people are just trying to make ends meet. And, when they don't make enough money and they're like, okay, I have to gas up my car still, even though it cost me $100 to gas up my vehicle, where it used to cost me $60 or maybe $50. I have to tap into my credit cards now to pay for gas. hopefully things will improve, but I have to do that just to, just to make ends meet or to put food on the table. Right. So I think we're in that, and we're in that mode right now, and it's not going to show up in consumer spending yet, but it is going to make its way into consumer spending eventually. And I think that's going to be scary, right?
Jobs data is all about in line, 72.5K versus 80 expected.
Okay. Okay.
Unemployment rate unchanged, 5.3%. Participation rate unchanged, 65.4%. So, yeah, thereabouts.
Okay. All right. Unfortunately, that it's kind of par for the course. I wanted to say this week, and this is a comment that I made in the chat room just a little while ago. This has been a very quiet week. And I know you guys in the UK might say, well, it's because we're on spring break or whatever you guys call. What do you call spring break there?
Royale with cheese.
A Royale with cheese. Is that what you call it? Sorry.
It's usually quiet the week after the NFP anyway, because we had all the hard data, didn't we?
What's that?
It's usually quiet after the NFP week because we get a lot of hard data, then the ISMs and PMIs.
Yeah, don't bring that monthly seasonal crap to this table here. I'm just kidding. No, but it is eerily quiet, is what I was trying to point out. It's been very quiet after having a lot of volatility in the currency market. I don't want to say I'm enjoying it being so quiet, but it feels like the calm before the storm to me.
Yeah,
and
eyes the hurricane
like to me. What?
Eyes the hurricane, buddy.
Yeah. Yes. Or I've actually. I remember one of the craziest things back in 1990. I was on the island of Guam, and we're going through a typhoon. In the typhoon shelters. So interesting. 130, 50 mile per hour winds, whatever it was. Took my car, turned it sideways or on its side, and then like an hour later or 2 hours later, it was like birds chirping, sun shining, and then boom, it hit us again as we were going through the eye of a storm. It's so weird. It's such a trip, I tell you. All right. Anyway, okay. Well, we got the dollar yen breaking higher. At least I hope everybody's adhering to what Kman's talking about is do not fade the yen. I mean, this dollar yen looks so strong. I have to note though, we are at 20-year resistance level. I wouldn't sure as hell wouldn't want to be long up here, but I don't know if I'd really want to be short just in case it broke out, right? I wouldn't want to chase it up here, but at the same time, you got to be cognizant of the price action and understanding that there might be some more words coming from the Ministry of Finance or the Bank of Japan as well. Hey guys, any last minute comments before we got the full team here because we have the Trader Summit event coming up. Really big event, obviously. Today I'm going to be interviewing Katie Stockton, which I'm really excited about. She's got some exciting news, something that's just happened with Fair Lead Strategies the last 2 weeks, which is pretty cool. But we have a really great speaker lineup today. Go to the very bottom and you can see the schedule. So, we kick off at 11:45 Eastern. That is in approximately 3 hours from now. And then we got Dave Hunter, Katie Stockton. Boris is going to talk a little bit about 8-cap securities. Anthony Crudelli. We're going to do a little bit of just some information on Trader Funding Program, Jim Rickards, and then Dale's going to be wrapping us up. That's day one, and that's coming up just in a few hours. But do you guys have any comments for the group before
I'm ready? Look at me. I'm ready.
You are ready. You got very much the Miami Vice look going. Do I have to wear a T-shirt with a blazer?
It's not a T-shirt. It's the proper T-shirt, right?
Yeah, and you're not.
Hey, where's my T-shirt?
Vice that is not even close to a Miami Vice look. You don't look anything like the dudes from Miami Vice. So
yeah, it does.
It looks like he's in Vice, but
He gives a lot of advice.
You might need some fashion advice from your wife. Is what I'm thinking.
No, you look sharp, Steve. Don't listen to him.
I
Where's
don't
our
listen
teacher?
to them.
Where's our
He's
teacher?
just first of all, you know the half Chinese guy. Like he's just jealous because he can't grow a beard.
Yeah,
So, you know.
This is true. I've been jealous of everybody not being able to grow. When the whole beard thing was in style. By the way, that was in style like 5 years ago, Steve. Just for your knowledge. When people were growing beards and all I could grow is this 3 hairs out of my chin, which is I look like a female.
You get braided.
It's not a good look.
Listen, Blake, when you can't grow it on top of your head, you try and grow it everywhere else.
Hey, there you go. I guess that that's the one thing that I do have going. I've got a full head.
Yeah, you do. That indeed.
And people are definitely jealous of that. Okay.
Can you guys put the link up again? Richard's asking for it.
Yep.
The link.
Do it for you right here. Also, where are you? Where is our chat box here? Let me go ahead and grab it. There's the link, guys. It's free to register. Make sure you guys register. Today and tomorrow are the busiest days. And these are the days where you want to be on the first ones to be registered. Because they'll be like chronological order. If we get let's say we got X amount of people logging in, it's going to knock you out if we're late to the party. So the sooner you are there, the less likely you are to get knocked out. So, but still register. And even if for some reason you can't hear these speakers live, you'll get the recording if you're registered. Okay. All right. Ryan, any final comments here?
No, just keep an eye on cable. It's edging closer to that big 130. We could get a few decent stops under there if that goes.
I'd like to see the sterling crap the bed. That's just because I'm long euro sterling, so that's no other reason than that. Because then I'd get this euro sterling to lift its head off of this really critical support. You can see this nice little false breakdown, maybe a nice little basing pattern. That's kind of what I'm shooting for. Thank you, Ryan. We'll keep an eye on that. K-Man, if you're still here, looks like he's gone. Looks like he rolled out of here. Okay. Stelios rolled out too. It looks like Greg is here. Greg, how are you?
Okay, I'm fine. Thank you.
Good.
Hey,
Hey,
you look good, Steve.
Thank you, mate. I'm sure you do because you always look good for some reason.
For some
Get a
reason.
room.
It's
All right,
genetic.
so
He's the pretty boy of the company, Greg.
Yeah, and you're the smart boy.
Greg, so hey, as we wrap up the week, anything that you, by the way, great call on the Kiwi short. You talked about the Kiwi short coming out of this wedge. Great call. It dropped. It literally has dropped like a rock since every day since you came on here on like Tuesday or Monday or whatever day it was. It has just come under great pressure. So I'll just leave you with this. So where do you think the Kiwi is going? I personally think it's going to channel support right here at 68 cents.
Yeah, I think there will be some rallies, but I think that at 690 we have a very strong resistance, and think that we could retest those early March levels actually.
Oh wow!
So I'm looking much lower.
Okay, all
These
right.
levels, yes.
It'll be really.
So Greg,
very much
I'm assuming you're also looking for a risk to go. Your risk assets to move lower.
Yeah, or it could stay really sideways here. It really depends how we see a close. But if we drop below 4,440, I think that we will see much more weakness early next week. Usually when we have the sell-offs on Fridays on US stocks, Mondays follows even lower. So I think that this is what we have to watch. On the upside, if we see a break above 4,600, then I think that we are going higher here on risk.
Okay.
All right. Well, fair enough. And like I said, great call on the Kiwi. I'm very bullish the commodity space, but I'm not. As most of you know, I wasn't bullish the Aussie or the Kiwi up at these levels. I really want to buy the Aussie down at 73 cents, close to the 200-day moving average. I'll be buying dips down here as it regains the trend, and I'm kind of taking some cues off the Kiwi too, because if let's say you're right, and the Kiwi makes, move down towards 67 cents, that would prohibit me from trying to step in front of the Aussie. So I am looking to buy these commodity currencies on dips. But those levels to me they're not where we're currently at, A, but B, I'm going to take cues from the rest of the market as well, because, I still am not ignoring, crude oil that looks weak. We're holding below 100. And it looks like the commodity complex can come under pressure. One last thing I think we should mention.
China lockdowns, bro.
China lockdowns. Yeah. I mean, I'm sorry. I think it's silly. The zero COVID policy that they have going on there.
It has failed globally everywhere. There is no such a thing, right?
Yeah,
you can't do such a thing.
Yeah. I just think it's a little silly, but anyway, that's just.
Yeah. But for Aussie, I think that this Chinese yuan is very important. I mean, back when we have seen here a high on Aussie dollar, firstly, we broke above March highs 2 weeks back or so. Well, yeah. Chinese yuan is still trading below that high. We haven't seen this retest. So actually, it was only the Aussie that moved to a new high. Even copper is making now lower high. So I think that Aussie making a new high on its own, it's not really. I cannot really trust those flows. It would be a different story. Chinese yuan would also be looking strong, but at the moment it's not.
All right, perfect. Thank you very much for that. And one last thing, guys, and then we need to really get going because we got to get ready for the morning edge and get ready for the event coming up. I just want to say Bitcoin, really big rejection the last couple of weeks at the 200-day moving average. I was actually short some Bitcoin. I closed it a little too early. I called it right. Sometimes I get out early, and that's just part of trading. But I'm a little worried about these cryptos here. They do look a little weak. Yeah, they do. So I think we're at risk of like getting back down towards this really critical support. Back in the mid 30,000 level. And then it might actually prove Steve's barista wrong after all this time, Steve.
You remember that story, right?
I still remember that guy.
Yeah, I do as well.
Barista is making a killing off of his altcoins. And
needless to say, after they topped, he has never mentioned them ever again, right? You know how this works.
And it's and I don't want to laugh too much at it, but really, if you the legacy, I say legacy, some of the bigger crypto names have really held up, but a lot of these altcoins have really been destroyed, and as we all had expected, it's like a technology bust, right? Bubble bust. There are going to be survivors in the story. And
exactly like the Nasdaq in the end of 99 to 2000.
You will have your Googles and Amazons, I think, and I think Bitcoin and Ethereum will be prime candidates, and like your Litecoins of the world. But some of these I'm still waiting to go poop in the metaverse, and the day I can poop in the metaverse, I'm going to be pretty excited about that. So
Speaking of which, Blake, cryptocurrencies have now surpassed 18,000. Just think about how many of those you believe would make it, right? 18,000. Yes.
Man. Boy, there's a lot of money being made and lost out there, and that's a scary thing. So,
Austrian economists have a word for it. I've said it before. It's called malinvestments.
Yeah. I'm sorry. Somebody just asked really quick about Ethereum. Just really quick. I actually think Ethereum's acting a little bit better, but like Bitcoin, I'm not even interested. I picked it up back here in the 25 to 2,700 range. I played it through 3,000. I played it up towards 3,200. I haven't participated the last month or so. But I still think the risk is that Ethereum gets back towards 2,500. I think Bitcoin will get back towards 35, 36,000. Those are levels that I'm more interested in. I'm not too interested in these mid-range crypto moves. I do think that they are a little scary though, because risk appetite globally doesn't look healthy, and I think we're in a range environment. So I think the S&P could very easily be back at like 4,000, 3,800, quicker than you think. And so if that's the case, then these cryptocurrencies are going to slide with them, so that's just an opinion there. All right. Well, hey guys, we have about a half an hour before the morning edge. I want to say I'll see you guys in just a few short hours, actually in 3 hours, right at this minute in time,
Yes.
3 hours from right now.
Exactly 3 hours.
Exactly 3 hours. We'll see you on the Trader Summit conference. I want to thank you all for registering, being in attendance there. I look forward to seeing you all there. It's going to be a very exciting event for the next few days, and I cannot wait till Sunday afternoon where I can drink a beer. That I'm going to be super excited about. So, Steve, Dale, Ryan, Grega, thank you guys for being here, and thank you all for your continuous support of ForexAnalytix and the F.A.C.E community and experience here. We appreciate each and every one of you being part of it. So with that being said, Dale,
see you at the concert, everybody. Remember, I'm giving out backstage passes. All right, you could rub elbows virtually with all our guests. Bring your questions.
Yes.
And looking forward to learning, and I expect enough pearls from our guests to string a necklace. So see you later, everybody. See you,
Bye,
team.
everyone.
Bye,
Cheers,
bye.
guys.
Thanks,
Adios.
guys.